Good morning, Philip. While many Asian markets were on holiday for the Lunar New Year, there was a lot of action in the U.S. The Federal Reserve raised interest rates. President Clinton announced an aid plan for Mexico. How are these going to affect Asian markets?
I think generally maybe the opening would be, particularly in Hong Kong, would be down slightly, but I expect it to recover quite quickly because the move by the Fed was widely expected as we went into the Chinese New Year holidays. And as I said, I think that the move was largely expected, and hence there's not going to be that much reaction.
So do people and do you expect another interest rate hike when the Fed meets in March, or is it coming to the end of its tightening cycle?
Yeah, I mean, that depends on what your view is. I think that it looks like they're going to have to raise rates again, but it seems to be slowing down, and I mean, indications appear to be showing that the economy is slowing down. We're going to get the employment figures tonight to maybe confirm that. If that's the case, then probably the next raise in interest rates will be smaller, and I think that's the signal to the markets, for a recovery.
Well, currency traders in the U.S. were expecting that the Fed would not raise rates anymore, or at least is reaching the end of its tightening cycle. That may weaken the dollar. What's your read on that?
No, I think that they're still going to have to raise rates again, maybe as much as another quarter of a basis point. But I think that it's slowing down the actual amount of increase, and that's positive because I think that the markets are affected by uncertainty more than anything else, and if they're fairly certain that interest rates are going to stabilize, then they have prospects for recovery.
Well, Hong Kong raised its interest rates with the U.S. rates. Is there going to be another run on the Hong Kong dollar?
No, I don't think so, because as I said, that was expected. I think there's any speculation concerning the Hong Kong dollar is going to be stopped by the monetary authority. They've been quite clear about that.
It's the year of the pig now, Philip. What's your outlook for the coming months in Asia? What industries are going to do well? What are not? What markets do you favor?
Yeah, I think that obviously no industries are immune from the rise in interest rates that we've seen, in the last few months. And I think really you're just looking at industries which are going to perform relatively better than, say, others. And we've been recommending for some time conglomerates in Hong Kong because they have a wide spread of businesses. Ones which will also do well should you get some stabilization in interest rates is property, which is completely out of favor at the moment, but that sector should perform better once you get some stabilization.
What industries or sectors do you think are not going to do well in the next couple of months?
Well, the ones which are not going to do well are banking and utilities, I think. They're still going to remain out of favor. They're very interest rate sensitive. And as I said, the ones that you have to watch are the cash flow, the strong cash flow businesses.
All right, thank you very much, Philip. That was Philip Chan in Hong Kong. A possible end in sight to a 2-year-old strike at Hong Kong Bank's Philippine operation. The two sides have agreed to resume talks to resolve the labor rift. The agreement was reached during congressional hearings into the dispute.